All right, all right. So we're starting a little bit early. Debbie, if you want to tag everybody and just let everyone know that I'm starting a little bit early here, that'd be great. Thank you, thank you, thank you. Welcome, everybody. Most of you here probably already know the basics of TA, but it's always good to have some kind of review on it here. And before I get too comfortable here, let me close the door in case my dog decides to go bark at the neighbors. All right. Awesome. Thank you all so much for coming, for being here. It is being recorded, just so everybody knows. If you have people asking about it, just let them know. It'll be public for everybody. TA is probably the easiest thing to learn in all of trading, right? The hardest thing is definitely emotional discipline, which we'll talk about in the next session that we do, the next actual EDU/TA. So that'll be really helpful. Personally, I find TA to be the most enjoyable. It's very educational in the sense of it can really tell you and show you, if you know what you're looking at and what you're looking for, where price action could go and or should go. The reason I don't like saying the word should is because the market doesn't have to do anything, right? The market can be illogical longer than you can stay soluble, right? That's a rough paraphrase of a famous quote. Basically saying the market can do things that make absolutely no sense longer than you can have money to survive it. So TA is very helpful in knowing, or at least getting a better estimate and hypothesis for you to execute your trading ability on. While emotional discipline is the number one thing that I believe everybody should learn in terms of trading, and I truly hold that as the highest echelon, especially after the last month rather. Really, this whole year, 2022, has been very difficult. I know people who are very good in bear markets, and they are still getting crushed, so let that kind of speak for itself. It's a tough market, right? It's a tough market. This whole section right here, literally from this line over, I mean, it's to a T. Like, we peaked on the right here, and as soon as we started this chaos. I mean, look at this rally here in the middle. It was just violent, Then we had, like, not even really good meltdown. This is why I personally am not a fan of bear markets. There's nothing wrong with them, and honestly, learning to trade them will make you a better trader, right? But notice how when things are going up, it seems like supply is supply and demand is demand, right? So come down, supply, demand is demand, and we have to wipe out those chunks in order to move forward. And then you get into bear markets, and there really isn't a lot of logical sense. We can rally for multiple days on absolutely no reason. It also doesn't help that in the modern era, we have Twitter, we have all this other social media, internet is at the all-time high, and retail trading is at an all-time high as well. So the markets have been a little crazy, and I found myself, especially with some of just the emotional stuff going on in my life, really struggling with it until I went back to just doing, let me go back to keeping it simple, right? Let's go back to the absolute bare minimum, simplest thing that we can do. So in order to do that, I went down and went back to this. Now, I use Thinkorswim to chart because I just personally, I love TradingView a lot. As you can see, it's down here. I love TradingView. It's great, right? For some reason, I just kind of got used to Thinkorswim and the way you can just hit the middle mouse to pull up all the tools. There are tools that I don't like on here at all that are much better in TradingView. It doesn't really matter which one you use. It's really entirely up to you and your preference. I know people that use both. They literally use this for some of it, and then their 1 minute charting and stuff is on this, and literally only their 1 minute, and vice versa. I use TradingView as my daily, weekly candles for individual stocks like AMD and Apple, Tesla, Nvidia, QQQ, SPY. I use TradingView for those. But when I'm looking at futures, I use Thinkorswim because the futures data is free. Right, I don't have to. It's real-time data. It's up to speed, and unfortunately, in TradingView, to even have this 4-square layout, you have to pay money. It's probably the only thing I really don't like about them is I feel like they're kind of money grabbers, and you can get all that for free on Thinkorswim. So that's what I use. Personally, I use this layout, right? So I'll get into what all this is in extreme detail, probably in the second session, and why. I'm going to cover it briefly. I like to have the daily chart up here, the 1 hour, the 5 minute, and then the 1 minute, right? Now you can do whichever order you want. I just happen to lay it out that way, and that's just kind of where I stuck. I only use 2 indicators, VWAP and the 1 minute 200 EMA and the 5 minute 200 EMA. And then if you notice on my higher time frames, I don't use anything. And there's a reason for this, and it's because on your higher time frames, you're generally going to want a cleaner picture. You don't always want to use indicators, in my mind, because the simpler you can make the trading, the better. Doesn't mean indicators aren't great. They're phenomenal, right? They work really well. As you can see here, we have this really, I personally fell in love with futures on the 1 minute 200 EMA. And honestly, it applies to just about every stock. I highly recommend checking that one out. Notice I don't use the 20. DrBullShark uses the 20. It's a phenomenal trend rider. If you had put it on here, you'd notice that the 20 EMA basically just rode this price action all the way down. And it only bust. I think it only came through like once or twice. But for the most part, you could see here, as soon as we lost the support when the report came out on Friday, because this is Friday's price action, you'll notice that once we crashed it, we never even got close. Like, we just kept melting through, and especially once the 200 came through VWAP, there was just no hope. Like, all these support levels got crushed. I'll explain what these key levels are, because they are not the same as these up here, right? They're similar, but they're not the same. So how do I set my price action up? Well, I like to keep them separated. Some people like to keep all their stuff together, right? So they'll have this 1 hour level and they'll mark it, and they'll have it on this chart, on the 5 minute chart as well. Some of the levels are just similar because that's just where the price action is, but there's a reason why I don't do that, and it's because it can kind of cloud your judgment. Sometimes simplifying things helps you the most, right? So clouding your judgment in the sense of, you'll mark a 1 hour up here, right? And you'll see that 1 hour on the 5 minute, and psychologically you're thinking, oh man, that's the 1 hour. That's the 1 hour, man. Like, that's a big level. And what if we break through it? Instead of just going, okay, that's a 1 hour level. So we're either going to be a magnet or it's going to be strong support or strong resistance. And you can get a little psyched out from it. So I started personally just kind of arranging them differently. If you notice, it looks a little chaotic, but that's because we just had huge moves. Like, there's normally not this many lines. If you get it on the 1 minute and it's let me scroll over, you'll start noticing that it's a little more clean. Like, this is multiple 5 minute candles on this move, right? It's this move here. These two do share. I do keep the 1 minute and the 5 minutes synced up because they're close enough that the levels should be the exact same. Everything else, the 1 hour and the daily, I keep complete. I have this one completely empty on purpose. So here's my normal daily. It looks a little chaotic because it's all squished up, but for the purposes of this session, I went onto a clean chart, and I'll rotate around on this chart. So 5 minute and 1 minute, they're together. I use the same, they hold the same levels on these two charts. These two charts up here are completely separate, even the 1 hour. And you can swap to the 30 minute if you'd like. I love that. I love the 30 minute chart. I think it's a phenomenal chart. I just personally was using the 1 hour at the time. So as you can see here, we did a base rally right here on the 1 hour. I don't use zones too often anymore personally, but once in a while I actually put this here before this happened because it's just such a clean. Yes, ES/ES is S&P futures, right? So the similar version of this is actually SPY, just like /NQ is QQQ. So it's basically the same thing. And when you see SPX trades, those people post, for those of you that don't trade futures on Webull, when you see people posting SPX gains, they're trading this. This is what they're trading options on ES. So it's the same thing. SPX is the same thing as /ES, which is the same thing as SPY. If you notice, it's 1/10, right? So everything's divided by 10. So /MES is micro ES. So that's 1/10 of that. The price will be the same, but your contracts, your leverage, your gains will all be 1/10 of what they are on /ES. Now, we'll get into futures at another time. That's just a brief overview. I'm going to talk more about the actual charting that we have going on. Because it doesn't matter what stock. This applies to any stock, anywhere, period. Right? So, as you can see here on the 1 hour, look how clean our price action is here, right? Like, even though we blew through this level, we came back, held here, and it wasn't until we broke out of this level that we came back, consolidated. I mean, this TA on this was just perfect. This is where I was warning people, we got to be really careful about this range, and it's probably a bull trap. It played out really well. I honestly didn't think it was going to do this. For a while, I thought we were going to get faked out, and then we did the nice head and shoulders here and melted down back towards a strong chunk of demand. This is not good demand right here. I know it's a rally-based rally, but it's not good demand. This is good demand here, right? Because it's a really clean, long-wicked rally-based rally, single candle rally-based rally. Love that. That's good. You can do zones however you want. Again, I don't usually use zones. As you can see, I don't really have any zones drawn. This one was just one of those I was like, man, this is so clean that I feel like all of this is weak. And we already came through and retested this chunk here and pulled down. So TA is very important, as you can see. It can help guide you tremendously. The larger time frames are very, very crucial, okay? So let's take a look at this before we actually get to charting. Larger time frames are really, really crucial. So I actually did a practice. I literally just wrote this one down on paper. Like, I have sticky notes here. I just wrote this down, right? So when we spiked up here, I actually went short at about 38.05, and I rode one of the longest plays I've ever ridden, even though it was just on paper, on ES ever. I rode it pretty much all the way down to sub 3640, where I covered, I think when we bounced, I ended up covering like almost on the dot at 3640, right? So the play on that was simply, we know that the range from 3800 to 3820 is a trap, right? We started forming this head and shoulders here, and it played out really nicely. All right, so what was the thesis here? Well, because it's a higher time frame, we can assume that if this plays out and we can't break this 3800 to 3820 range, right? And doesn't matter what stock it is. Let's say this is, SPY, 380 to 382. Let's say that's the range. If you know that that's the range that's, kind of hesitant, like if we can't break and hold this, there's not enough momentum to keep us going higher. And if we start pulling away from that, what is the higher probability setup? Not guaranteed, because nothing's guaranteed in the market. Well, the higher probability setup is that we're going to probably go down, right? We have a head and shoulders on a higher time frame. So, what happened here? Well, we just melted down into the abyss, and you could have had phenomenal chance to get in on any stock, really anywhere across the board. If you want to look at, I don't know if I have any lines drawn still on SPY. I don't think I do. Oh, I do. Okay. Yeah, I do have some. Let's move these studies real quick. So I do have some levels. Let's see how well did any of these levels play out? Yeah, they played. See, I haven't touched this chart, by the way. I have not touched SPY in probably 2 months, maybe 3. But notice how well these levels played out. These 390, I'm so used to saying like thousands. So 390, 380. This was your trap zone. So here's the same chart that we just looked at on ES, but on SPY. Same thing here. We know that everything above this 37.7 to 380 is a trap. And look what happened. Here's your head and shoulders, right? And what played out? Well, we melted straight down. Now, obviously, because we have SPY and we're not on futures, there's actual, downtime. You can't trade in this time. You can't trade in this time. On futures, you can trade this whole chunk, right? So unfortunately, you couldn't have gotten this meltdown, but you could have gotten this. So that when we lost this, got bought up, opened here, even on the 1 hour, we're just ignoring all the other candles. What happened? We rejected the 370, and that's another key level because it's a power of 10. So basically, every 5 points on SPY on SPY specifically is really important, and then obviously the power of 10s are even more important, right? So if you look right about there, close to 375 is been a really good level as well. So higher time frames, very important, very, very important, right? You want to use these higher time frames to get a picture of what's going on. I'm actually going to clear this drawing set entirely. And then we're just going to go back to some ES here, just so I don't ruin my setup. So how do we go about basic TA? Well, let's start at the highest time frame that is reasonable. Weekly is not reasonable for most of you. Most traders here are not going to be trading extremely large time frames. It's good to know what's going on in the weekly, right? It's good to always have this picture in your head, right? Always good to have this picture in your head. And it basically works out to be the same, like we know what's going on with this. We know we have this trend line that we just couldn't break. We have multiple rejections. So if we do somehow, which we won't, but if we do somehow get a pushback up here, a fourth test is more than likely to break that trend line. Usually 4 tests is about the maximum. Doesn't mean we will. We could reject a 4th time, but usually once we get to 4 times, we could do that. We're probably not going to do that. Now, I don't really chart too much on the weekly. It's awesome, but it's a little overkill, right? Like I'm not trying to get a picture so big that I can't use it on the smaller time frames at all. So the only reason I'm going back 3 years on the daily chart, which is the main chart we're going to start with, is because we have the pre-COVID dump. We're going to start it at the nearest hold level, which is 3,400 in this case. Doesn't matter what stock it is. Fine. If you have AMD and you're looking at the daily chart, AMD's down to like 50 or something absurdly low right there. You know, when it was at 100, I'd be looking at powers of 10 only. I wouldn't really be caring about those little 5-point moves. Once we dropped below about 75, that's when I'm going to start paying more attention to 5-point moves. So every stock is going to be a little different. So again, if we go, and I don't need to put slash, my bad. So if we go, here's levels that I've charted forever ago, as you can see, and even on the daily level, you can see how some of these held up really well. We'll make this easier and just clear this drawing set. All right. A lot of gaps because, again, it's not going to be as smooth as /ES, which is a futures thing. Futures are open 24/7, so, you know, except for the weekends. But even here, check this out. What do you have right here? You have a head and shoulders. That trend line held for quite some time. We actually had a false break over it right here and then lost it. So this is super bearish. If you break this trend line on 3 taps and then collapse, that's super bearish. So again, starting on the higher time frame, doesn't matter what chart it is, but if you notice, we're down here in sub 60, so above 100 on stocks. As you can, I mean, we can just put, look at that. I mean, phew, that's a beauty right there. Look at that trend. Bam, 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 bam. That's great. Even right here. Oh yeah, that's perfect. Right. So see how simple that was? Most of you probably very familiar with this. Always good to go back and review it. Same thing up here. Look at this pivot, right? So we're going to go and find a pivot on a daily chart. Here's a pivot. And does it really line up? It's pretty good. It's not great, but it's pretty good. It holds up pretty well. Price action seems to respect it pretty well. We consolidated around that. Generally, you want hard taps, so you generally want like a pivot that has lots of taps up and down, up and down. Like again, here's a pivot range. Notice how we have multiple taps. Here's a pivot low. I had this. This was a great trade, by the way. I don't know if any of you guys were trading back in late 2021. This was great. This breakout was just amazing. That was such a good time in the market. Here's a pivot low, right? Here's a pivot low. We can do that, right? And if you extend it over, what does it look like? Well, that's pretty close, you know? So if you need to adjust it a little bit and you think, hey, I get more taps doing that, that's probably a better setup for you. Oh, yo, DrBullShark, big love, man. Pepe Lord. Dude, thank you so much. All the love to DrBullShark. You're such a legend, dude. I hope you're having a great time. Yeah, awesome, man. Thank you so much. So, as you notice, TA can be as simple as this. You don't need to worry about, okay, oh my God, it's not right on this candle. It's not there. Don't worry about that. That's not like, nobody cares. Nobody cares. Like if you have to zoom in that far, if you're like this and you're going, these candles are not touching right here, that don't do that. That's just good. You're just going to stress yourself out. It doesn't matter. Your goal is to look and figure out where the price action is going to respect more often, right? So let's get back to /ES because it's a little easier to chart. I actually recommend this to people to start charting, right? How to start your charting in TA sessions just to kind of get your eyes used to seeing these things, because as you notice, we don't have like a lot of gaps or anything because again, futures runs almost 24/7, right? Smash. No, yeah, you don't have to worry about that. Don't worry about it being on the dot, right? It's not, you know, it's not something that you're going to have to worry about. So let's start with /ES. We're going to go to the pre-COVID dump, right? So this is a pivot high. We know this COVID dump was a serious thing, right? This was a serious meltdown. So we're going to go to the pivot high. If you look, none of these candles actually tapped. I think the closest we got was this one, which is 33975. We didn't actually get to 3,400, but what's the closest to it? If we're 2.5 points on a 3,400 point stock, I'm just going to put the main key level at 3,400 and know that there's a few points on either side of the key level. This will also help you from getting faked out. You have to imagine that there's this kind of little tiny box like this on either side to give it some wiggle room around any key level that you put. It doesn't matter what chart, what time frame, or what stock you're using. Always imagine it as like a little bit of leeway on either side, instead of it like, well, it came up right here, and so it's invalidated. No, it still respected the key level. If anything, those kind of candles show, especially because the candle bodies are here, show that everything above that is now supply. So this needs to be chewed up, which it was right here, in order to try to get further away and clear that price action. Now, this was a pretty rough, if you look at it daily, it's kind of rough to play all this, but most people are intraday traders, myself included. I'm not really a long-term trader. But it gives you an idea of where we're going. So that's why we use the daily chart to kind of get started, right? And you don't have to go crazy. Like, don't go too crazy packing a daily chart full of levels. You know, you're going to want to go, here's our pivot high on COVID, right? And you can name it however you want to do it. I always call it the pre-COVID dump. So we know, hey, this is the pre-COVID dump. I'm going to change it because it's the very important level. So I'm going to change it from white, which is my default, because it looks really good on a black background with standard color candles. Do however, whatever color you want works for you. Don't worry about my colors. Just know that I'm changing it to be more noticeable. That, hey, we get back down here. This is where I think we need to test. And I still actually am holding this thesis of we need to at least test the 3,400 range. I probably want it to test this range, right? So why do I choose this range? We see consolidation on this range before we bounce and then melt it down. All of this is synthetic. This is a synthetic market crash. It is not a real market crash. So there is going to be a desire to at least test the pivot high from that synthetic crash. That's why I believe we're going to at least test the 3,400 level. Why did I choose this range? You see some action here. When we rallied, look where we stopped. We consolidated, retested, and then broke, right? Notice how even the pre-COVID dump right here, and even right here, again, we're not going to get this close and be like, well, you know, this candle and these candles and this can, like, no, don't worry about that. Don't stress yourself out too much, man. You're stressing yourself out for trading is hard enough, right? It's already stressful enough, especially with Twitter and social media and all this thing. A single tweet from Putin can send the market into no man's land. Yeah, if you're zooming, you know what, Deb? Zoom out a little bit, right? Zoom out. It's such a key level. Such a key thing to do as a trader, right? Now, this is insanity, right? So this is going to be harder to chart further down because this is very violent, non-real anything. Yeah, this is very non-real price action, right? When you have, there's never been a synthetic dump like this before, ever, in the history of the market, ever. It just has never happened. You know, and we're not going to get into politics and why COVID was the dumbest thing that's ever happened to humanity, but the bottom line is it was, and it caused this insane meltdown for absolutely no reason. It can crush people's livelihoods. So this price action is going to be very hard to chart. It's not going to hold up TA that well, and we don't really know what's going to happen once we kind of get below this roughly 3,200 level. Again, I'm imagining a box around this thing right here, you know, not quite this large, but you get the idea that I'm imagining a box around it where, like, yeah, probably 3,200 is going to be an important level because it's a power of 100, right? It's a power of 100. And if you notice, price action does follow it really well. But I don't want to put something that close to what was already a really good key level because it's a pivot-based level, right? You just have to keep that in mind. That's where you use the 1 hour chart to place that 200. You would place the 3,200, not 200, 3,200. The 3,200 level, which should be on your 1 hour and your 5 minute and 3 minute and 1 minute. I know a lot of people use the 3 minutes, so I'm going to try to reference that a little bit. So because it is a very important level. On the daily chart, though, you don't need that level because we're not focusing on that. We're trying to get these pivots. Here's another good level right here, right? This one looks pretty good. You got to, you know, again, we're not going to be like, oh my God, it didn't touch right here. Oh no, look. No, we don't need to be that close. Like, it doesn't have to be perfect. It just needs to be good enough to understand that price action around this level is going to be a little wonky because it was prior resistance and support back and forth, right? Wicks are better than candle bodies, but don't underestimate candle bodies like this and this. Just everyone kind of poo-poos on them and hates on them, but realistically, it's still very important to have them, right? It's still important to use them. Again, same thing here. Only one candle wick and some, and the rest is body. But if you put it right there, where does it end up? Oh, look, that pivot high ended up being support for our recent bounce for 2 days, which was a miracle. And honestly, trading this was great until the last 2 days. And even the last 2 days were pretty good because it wasn't just like, they didn't really try to fake us out, in my opinion. It was pretty obvious where we were going, right? It's pretty obvious what they were going to do. So you start on your daily, get your pivots right here. So here's your pivot. And if it doesn't work, it doesn't work. So like here's a pivot, right? And it works pretty good. But in the bigger picture, maybe not so much. And you could leave it. There's nothing wrong with leaving it. And no one's TA is superior to somebody else's. It just, unless you're just straight garbage. Like, if you're just putting a line like right here, that's, which ironically ends up being a pretty decent line. But if you just put it randomly with no, if you're just doing this, like that's not going to help you. That is bad TA, right? But as long as you have some thesis and you actually can see price action is respecting the key level that you place, then it's a good TA spot. You may have different lines. You will actually have different lines than most people. So how did I call the 3,200? Because if you look at this, notice how price action really respects that 3,800 level. Again, a power of 100. You could basically put them at like every 100 when you're this far up. But not every single one of them is super useful. As you can see, 3,700 really wasn't all that useful, right? So here's roughly 3,700. It was pretty good, but not great, right? It's on my 1 hour chart, but not on my daily. So there's no real reason to have placed it there. But if you notice on the daily, this is where you can kind of start zooming in a little bit, not too much. Again, you don't want to go too crazy here, but look at how we can't seem to hold that 3,800 mark. We just can't seem to do it. 3 times right here. Look how we had this big wick here to try to come down. We tried to break up above this, couldn't break what was the high here? I'm blind as hell. So this is 38.33. So 38.33, which you can check up here. If you guys are ever curious, you can look right up there and it'll tell you the high, the open, the close, the high, the low, etc. So 38.33 was the high here. So in my mind, I know to really confirm that we're on the breakout, we have to break and hold that. Not even, 38.20 is something I charted on the 1 hour. And as you can see here, it's pretty damn close. So I'll show you what 38.20 looks like right there. If you notice, sorry, I forgot to put it all in the extension. Bam. If you notice, that's a pretty good range right there. You could literally draw a box there if you could actually just draw a box like that, not there, but in between these. You could just draw a box and show that. But if you notice that that's a very important level, all right? It's very obvious we literally peaked 38.20, 38.19.5. We could not clear those levels. What I was really looking for was to break that, and then the confirmation would be 38.33, which would confirm that we have to at least go up here and test this. Oop. If I could stop sucking. Here we go. We have to at least go retest that, right? We just have to. We got to go retest this range up here. So if we had broken this, we were probably going to go up here to this 392425 range. That's almost guaranteed where we're going to go. Now, again, it's the market, so nothing's guaranteed. We definitely could have just like faked it, and trapped all the bears in the false break and then melted into oblivion, which is kind of what we did. A lot of people got trapped up here. People like Starboy and all those guys, they got absolutely crushed chasing calls up here thinking we're going to break back out, and they just got murdered trying to do that, right? Now, I'm not going to put that on the daily chart, but you get the idea of why I'm using the daily chart to kind of see where things are going. We've got this trend line. Again, don't worry about if it's not perfect. Like, the idea is that this is your trend. We kind of failed to break it 3 different times. You can do smaller trends, like here's a trend right here. Like that's a trend line, but that doesn't mean that, you have to chart it on the daily. I tend to do bigger picture, cleaner. I don't like to scatter it too much, right? So here's what my daily looks like on the actual daily chart. So it's a little chaotic, but if you look at it more like this instead of zoomed out where everything's just like there's 50,000 levels in here. Like if you start looking at it more like this, of like, hey, here's this 3,800 range, right? Again, here's what I was talking about. Oh, it didn't touch it, but you know that it respected that range, right? What was the low here? 38. If we're 7.5 points away, I'm taking that. Like yeah, for sure, 3,800. So we know 3,800 is a really important key level. Here's our pivot low, which is 3,640, which is why I told everybody it was a key level. Look where we could not hold. We could not hold the 3,640 meltdown, right? So it's very, yes. J Corb said also have a typical evening star on the daily after a 2-day rally, which is this candle right here. Now we can zoom in a little bit. This is basically an evening star right here. Right? It's pretty close to it. There's multiple variations of this. People will say, well, it's technically a hanging man or a hammer because the wick is an X amount of body higher than, like, no, don't stop. Like, stop. You're overcomplicating trading for no reason. The basics is you have what looks like an evening star, right? We have a long wick. It closed red, and there's a little bit of top up here with a long bottom wick. That's a pretty good sign that we're not really going to continue the momentum. This candle could have invalidated that, right? So this candle here could have invalidated this evening star if we had continued to break higher again, especially over that 3833 range. You can apply this to any stock. It doesn't matter. Just the same thing. Here, why did I choose this level? Because it was a pivot high. If you notice, EA seems to respect that level really well. Shortly above that, same thing. Pivot level up here. Now over here, it doesn't respect it too much, but over here it does. So you don't have to worry about perfection on your TA. Just do it so that you know, and obviously recent activity should be weighted heavier in your mind, right? So the only time I'm going back this far is when I have to. We have to go back. We have no other information to go on, right? Other than the fact that 3540 is probably our next one. In this one, I actually failed to understand this right here. This is where I really should have been paying attention, is that this pivot high ended up being support, and that 3540 is probably another good zone right down in there, and I can use both of them. So it gets a little busy. I don't like to have my daily chart this busy, but in this case, it's kind of necessary because of the pivots right here, right? You can see this pivot by zooming out. So you don't have to go too crazy. Just understand the bigger picture on your daily. This is your daily setup. Here's your trend line. We broke below it, retested, major key level right above the 3,900 range, which is a power of 100, right? So here's a power of 100. Unable to hold this range, unable to reclaim the trend line, melted down. Got to 3,800, kind of tried to rally, failed the rally, and melted back down. Came down to the pivot low, trapped some bears down here when they were like, okay, this is the big meltdown we're waiting on, but we were too oversold, and then bounced up to retest that major level of 3,800 and just above at the 3,820, 3,833. So very important to chart your daily charts. Very, very important, because it can give you the image in your head of like, where are we going in the next day or two, or even a couple of weeks. People can use the weekly chart, but recent price action in my mind has been a little chaotic, because realistically, and this is kind of what I meant by moving into the weekly. When I move into the weekly, it almost looks like a gigantic bear or bull flag. Not clean, but your price action can get a little wonky for people like me, where you kind of see this gigantic move upwards followed by this, So this here just looks like we need to take profit. Market's just kind of shitty. Economy, there's some geopolitical nonsense going on. Putin's being a dick. And so there's market's really unsure. There's a lot of inflation. And this can be viewed as more of a pullback, or just needing to kind of correct and reset the market, which is why I've been warning people, if we start getting down to this pre-COVID dump, don't be surprised if we kind of go into this range here briefly, and then the market starts, as long as we don't do anything stupid economically in the meantime, or obviously thermonuclear war, which would be horrible. But assuming that doesn't happen, then don't be surprised to see bears get fucked here. This is a range where, in my mind, this is bears get fucked range. Below this range is where we'll start seeing bears are in full control of the market, and it's dangerous. Everything below this, personally, this is not financial advice. Personally, if we get below this roughly 3,200 range, I'm probably going to start looking to load up some long-term stuff down anywhere in this range. If we get down into the COVID low, into like the low 2000s, you bet your ass I'm probably going to start loading the fuck out of goddamn everything. This is the yikes range. This is the consider start loading range, somewhere in here. Again, not financial advice, but just something to think about. And I guarantee you that Warren Buffett and all the rich people are fucking loading the shit out of everything down here. I guarantee you. Like 100%. Just like, there's no shot that they're not going to be like, man, fucking ES is at 2,200, man. Hell yeah, it's a discount. I'm loading up $16 billion worth of shit and selling it back at 5,000. So something to think about in your long terms. We'll get into some of that later. Let's move on to one of my favorite charts recently, right? Let me get this back to my daily. And I need to get back to the 3-year, which I'm too lazy to fix that. Favorites to have the 3-year. All right. So now that we're actually, that's on the, yeah, okay. So now that we're actually there, let's go to the 1-hour chart and let's talk about this, right? Again, I don't really use ranges. I don't like putting them on the chart. They just kind of get in the way for me personally. And generally, I understand the ranges there anyways, because key levels should be at the pivot highs, right? So if you notice right here, this is the level I charted, this was already here. This level was already here. It just played, these two levels were here. It played nicely in this consolidation range. Also, fuck this time period. That was like the worst few days of trading ever. It's fucking awful. And thankfully, we actually got some movement. Again, another kind of shitty day. Some good movement, shitty, great, really good. I don't care if as long as there's movement, I'm good. It can keep going down. I just hate this chop. That's just awful. But if you notice how in the 1 hour, I've got a lot of levels that I probably wouldn't have. I don't know what that's from. Oh yeah, that was my short. So in this, I have a lot of levels that seem way different because we're zooming in a little more. We're not doing the daily. If I take this chart and put it on the daily for you, oh my God, it's fucking chaos and pandemonium everywhere. But that's why we're not looking at the daily. We want to look at a little smaller time frame. And the 1 hour gives you probably the cleanest picture, as you can see, right? As soon as we got to about here, we should have known that until we break this pivot right here, there's no need to be trading. Like, you just don't bother. Now, on the 5 minute, sure, 3 to 5 minute, in the 1 minute, a lot of trading you could do. But for me, nowadays, I stay away from that insanity, right? We had a nice little rally, we had a rally, then sell, rally, then major sell, a little bit of a relief, major sell, and then chop, more sell, rally, more sell. Notice how all these ranges worked out really well. Why did I choose those ranges? Well, because price action is respecting these levels, right? It's good. It's pretty solid, right? It's not perfect, but it's solid, right? It's not great, but it's pretty good. It doesn't have to be great. It just needs to be good. It just needs to give you a picture. And as I said, when I think it was here, I think you'd have to ask Grover. I think Grover was the one that called me out on it and said that I honestly didn't think it was going to play out. I thought they were really going to push it more up here and really trap the bulls and then just destroy them. They kind of give us a clear indication this time. We have our nice head and shoulders here, right? Here's a typical pattern. Most of you already know these patterns, right? Head and shoulders. Beautiful, right? It's bearish. Doesn't mean it's always going to play out. In this case, it did, especially because our pivot low here just melted into oblivion. But this range is definitely your scary range, right? And this would be your, I got to fix this because my OCD is driving me crazy. That would be your confirmed breakout. If we could break this 38.33 and keep going, we'd come up here and test this pivot range and then back up to here and then back up to here. Now on ES, even if you're trading MES, which is micro ES, for those of you that aren't into futures, this is a lot of range here between these levels. I mean, you're looking at 20 points, 30 points, almost 40 points here. That's a lot of money. So if you're trading SPX, you're making a lot of money on those moves because you were looking at a 1 hour time frame. So let's go to something that's what had a lot of good movement. Tesla's been melting into the abyss, right? Yeah. Oh, yeah. Yes, it's been dying. Same thing here. Unable to hold this. Here's Tesla, unable to hold it. Here's our pivot high, right? So before this day even happened, I'd put one right there, and I would put one like right there. All right. So before any of this even happened, I'd just do this. Right? This is pre-market, so I'm not going to worry as much about it. That's why it's a little different than futures. So I'm going to try to show you a couple on that. They are valid sometimes, as you can see here. You can kind of see how this range right there, that's, even though this is pre-market, after hours, it held up. So that's more important than understanding pre-market versus after hours. Like, oh, well, I don't want to use it because it's pre-market or after hours. But does it hold up? Yes. Okay, well, then use it. So we're going to use it, right? And same thing here. Roughly that range. Doesn't have to be perfect. Yes, we know we got these, doesn't have to be perfect. As long as price action is agreeing with the TA, there's no reason to ignore it. Even this, see here, that no reason to ignore it. Now, you could put one right up here if you want, if you think, hey, if we get this rally going and we start testing up here, this 260 range, this is close enough, so I'm just going to go straight to 260. It's not going to fit the candle, but, if it's close enough, I'm putting it right there. So 260. So we know if we break this 260, we're going to fill this gap for sure. We're going to come, again, not guaranteed, but generally speaking, we're going to fill that gap. Same thing here. So here's your pivot low. You can choose either one of these. I'm going to choose the lower of the two, right? And even like right there is pretty good, right? That's pretty good. Not perfect. You don't have to. You can leave it. You can do that. You can leave it. But it gives me a picture of like, hey, this range right here, if we can't break and hold that range on this day, we're probably not even bothering going to go test up here or up here. Here's another one. Right here, and right here, and even over here. It's a good range. Don't complicate it. Keep it simple. Same thing here. Now I'm looking like that. Then I'm going to go in here, edit it, because it's close enough that I can just do 22175. All of these candles are close enough to this range. You can either do that, or you can say, hey, I'm going to go just 2222, bam, and say roughly 2222, and just understanding a little wiggle room on either side. That's going to be good support. If we open below that and we retest, there's higher probability that we reject and then die. And so if this opens and we gap down, there's a higher probability of us coming down, So super simple, right? No reason to complicate this. There's absolutely no reason to complicate this. And if you look at the 5 minute, wow, look how the 5 minute respected. Oh, wow. It's almost like TA works. Oh, geez. Oh, geez, Rick. Oh, geez. So 1 hour, very important. Personally, one of my all-time favorites is that 1 hour chart. It's just so good. It just really seems to give you a clear picture. For those of you that like a little more detail, to swap into the 30 minute. Gives you a little more detail, right? A little bit easier to follow. So if that's your cup of tea, go for it. I highly recommend that as well. It's fantastic. It's another really good chart. I just prefer the 1 hour. It seems to give me the clearest picture. Going back to /ES, which I believe should be here we go. So here's the 1 hour. Here's our daily. So why do I keep these different from the 5 minute and the 1 minute down here? And this will be our last thing for the evening, and then I will continue this either Wednesday or next Saturday. Probably Wednesday. I'll probably do it Wednesday, right after market closes. So if everyone's interested in that, I'll continue my session. Let's give it a couple more days here. Let's do about 10 days. Yeah, let's do that'll be good. Yeah, that's perfect. Currently, I'm going to get rid of the EMA and VWAP real quick just to clean it up. When I chart my levels, I never leave the indicators up because they will distract you, and I believe that they can kind of misconstrue your TA, right? Why do I keep them separate? Because as you can see here, I think I left that one there on purpose. Yeah. As you can see here, these levels are different because it's a smaller time frame. There's going to be more pivots. There's going to be different price action that happens. The overall trend and everything else obviously is the same because it's the same stock. So if you shift over to the 1 hour, you'll notice it's significantly crazier, right? But notice how they still pivot around the same ranges. It's still the same ideology. Up here, 80, 3820, 3800, still all the same stuff, right? So you can leave, the 1 hour is probably the only levels that I would say you could leave on the 5-minute chart. And you have to do what makes you comfortable. I've been saying this for a while because I wish I had learned it when I first started trading, is that the whole point is to basically be Bob Ross. You're supposed to paint a picture. And however you need to paint that picture, paint that picture. Don't worry about how other people are painting the picture. Just worry about how you're painting the picture, right? So make sure you paint the picture because, and I'm going to extend that over because it looks, look at that. Whew, I love it when that happens. That's just beautiful. So paint the picture however you need to do it. However, I personally like to do it this way because it gives me a better picture when I'm trading. I trade off the 5-minute and sometimes the 1 minute when I'm kind of timing my entry or just trying to go for a scalp. But if you notice, I literally I'll go on a clean chart and let's create a new drawing set. Right? I'll go on a clean chart and I'll probably have different pivots, honestly. I'll probably have different levels than I did previously, right? You know, I'm going to go and do the same things I was doing on the last one. And I'm just going to keep doing the same thing. I'm looking for pivots. You know, I'm going to look like that. Look how well that worked. You know, same thing here. Look at pivots. Go a couple days back. If you want to do this instead right here, do that. It's okay because you're on a smaller time frame. So it's going to be a little busier than your other time frames. You know, they don't have to be perfect. Just get in there, throw some in there that look like they're good ranges, and then you can go and refine them later and say, hey, you know, I'm going to look at this, and then when I get closer to modern price action, did it hold up? You know what? It really didn't. I don't like this one. I'm going to remove the drawing because TA didn't really, you know, price action didn't respect the TA, so I'm going to get rid of it. Same thing, you know, let's put one there. You know, you'll put one like right there. You know, you'll put one at this little pivot high. And since it doesn't really work over here, I'm just going to leave it right there. Same thing here. This is a pretty good pivot range, actually. See how that worked out. Again, I'm looking at things like there's a little bit of wiggle room on either side, especially on the 5-minute. You got to start looking at like, hey, the wiggle room is going to be a little bit larger visually, even though it's about the same, right? Yoshi asked, do you have any rule of thumb about how close the imaginary box I was just talking about for the key level? No. You just have to understand that price on a little bit on either side. Depending on the chart level, it's always a little different. Like if you have a 1 hour level, the wiggle room is going to be realistically more points than a 5-minute key level where there's going to be some wiggle room, right? And it's more of making sure you understand that no key level is definitive. Obviously, I like to clean them up like this. So 36. If I'm close enough to 3660, for example, in this case, I'm going to put it at 3660, right? And just understand that there's a little bit of wiggle room on either side, right? So it's the same concept. No matter how often you do it, no matter what chart you're looking at, no matter what stock you're looking at, start with your daily and your 1 hour, and then, or 30 minutes if you like the 30-minute better. And then move on to a separate 5-minute and 1 minute. How do you get the price on those levels? What do you mean, Dave? Like this right here, where it says the price, right there? Or do you just mean like how my? It's right here. So when you right click and go, so you would right click, go to edit properties, show price. And you can choose on the right or the left. I do the right because the left will be over here and it can kind of get in the way for me personally. Plus, since I have the price right here on the right, I can match it up quickly. Like say I can, yeah, correct. Not a problem. Yeah, so you can do show price on the right, show price on the left. You can do right extension. So if you want to just align from like here to here, you know, you can do that. Same thing left because if you notice when I do this, it only goes to wherever I click it. So if I wanted to do left extension to make it a full line, you just do that, you know. Really fun. I really like this program. There's definitely things I don't like about it, but there's things I really like about it as well. So here, as you can see, those levels are different from what I actually charted here. These are the ones I've been using that I respected really well. Don't be afraid to erase it and start all over. I've done that many times where I've just like, after, maybe it starts invalidating some levels and it's not holding levels all that well, I'll just erase it. I'll just get rid of it, start completely over, and go from there and do it 100 times. That's what really builds, the repetition's what builds the perfection of your TA. And again, so here's a key level that we dipped below and then came back, and then it held, right? I'm not worrying about this. I'm not freaking out about this. This isn't as important. Okay. So this, again, here's another key level. Does this key level hold all the way to the left? Maybe, maybe not. Put it on. Seems to do okay. Seems to do okay. Yeah, it's kind of invalidated over here, but again, I'm also weighting price action. More recent price action to me is more important than older price action, unless, of course, as we showed on the 1 hour, where we just don't have anything to go off of. Like we don't have anything lower here, so we have to go onto the daily and go all the way back to find some key levels to focus on. And you can, a level like this 3,400, which is the major level, you can actually you can place anywhere on the chart, on the 5-minute chart. So like, yeah, I can't go that far back because it literally won't let you go that far back. You can't do it. 360 days is the furthest you can go. You can put it here, right click, properties, and change that price level. And I'm going to put the left extension on, change the price level to 3,400, make this here. Show name, I want it on the right, and I'm going to say pre-COVID, done. And now, if I go all the way down there it is. So you don't have to worry about going all the way back. You can find some key levels on the higher time frame that are really important, and then just place them on your 5-minute chart that way. Same thing with the COVID low. I could come up here, put put a random one, edit properties, right? And we're going to say it's 2175. I'll be crying if we get that far down. Jesus. COVID low. I actually think it's like I actually think it is to the T, if I remember right. Let's find out. Yeah, that's to the T. That's to the T. And now it will be down there. I'm not going to scroll all the way down there because you get the point. So, and every program will do that now. Every single one of them. Thinkorswim, Trading View, I believe even IBKR will do that for you as well. Generally, most charting programs will let you do that, but that's just a little tidbit. So for your TA session, remember, start with your higher time frames. Don't worry about it being perfectly clean. It doesn't have, if it gets a little jumbled like this because there's just two really big levels close to you, that's fine. Don't let it get too crazy. Generally try to keep it somewhat clean. Even this is a little crazy for me. I don't like having this many levels. I'll probably clean this up later tonight, but keep it. Don't be afraid to go to the round numbers. Like if you're 3801 and that's where your level is, just put it at 3800 and understand that a couple points on either side on a stock this big is really important. Even if you're doing something like Apple and you go to Apple and you have these, Jesus Christ, look at these levels. What was I doing? Let's clear that. And just understand that, these key levels, they don't have to be perfect. They're just to try to give you. So even on Apple down here, I'm thinking, okay, well, probably $1 on either side is a little bit, a little bit different. You don't have to worry too much. But same thing here. Here's a pivot. Just because we have this freak out right here where it tried to break and didn't, like, that's still valid because it shows that price level was still being defended, right? As you could see from the gap down. Same thing over here, right? So it's really cool. I think it's really awesome. I just have a blast doing TA. I think it's one of my favorite things. It's just like an art form, and it can really help you with your trading once you understand that it's not a definitive thing. It's not a permanent price. There's a little wiggle room. So what would you, if you were a market maker, what would you do around this 150 range, right? You're going to try to bait the shit out of everybody around this 150 range. And that's kind of what they did, especially here and even right here. They just baited the crap out of everybody around the 150 range, right? Well, that's what I would do as a market maker. My job is to make people lose money, so which is evil. That's another rant for another day, why market makers are evil and should never exist. But the bottom line is just having the ideology in your head that this level is a key level. So if I'm going to go from, if I'm short, let's say I'm short, right? Yes, you can also, Deb said the color coding of lines is super helpful. That is very true. I forgot to touch on that, so thank you for bringing it up. If you need to color code them and say, hey, I want the daily ones to be teal, and change the name if you want, and just say, hey, this is a daily level. So if you want this to go across all of these right here, all of your charts, like it does right here and over here and over here, then you would do that. And then you would say, hey, this is an hourly level right here, and I'm going to do hourly as this like pink color, which is a beautiful color. I used to hate pink and yellow. And say this is a 1 hour, right? So now we know it's a 1 hour level, and look where it shows up right here, right? Like, cool, perfect. If that helps you, do it. Don't be afraid to do that. I don't need to do that personally. I just that's why I keep all the charts separate. I'm literally watching, I'm watching the daily chart as we get closer to the end of the day to see like, hey, are we kind of rejecting that? And I'm looking at the 1 hour. When we got up here and spiked up here, I went short on paper and rode it all the way down, and simply even though this didn't really show that too much, here's our meltdown right here. This is our meltdown right there. And it worked out pretty good, even though my level's different, right? Like 3770 and 3765 are not the same levels, but the ideology is the same. I was just being aware of the higher time frame, because the higher time frame rules the smaller time frames. So the higher time frame will drag these with you. The daily chart's going to drag the 1 hour, which is going to drag the 30 minute, which is going to drag the 10 minute, which is going to drag the 5 minute and the 1 minute. That's why you chart on a higher time frame. And with that, I'm going to wrap it up there. That'll be an awesome first session. Thank you all so much for your time. I'm really glad you guys could join me. I will get this uploaded overnight for everybody so that the people who weren't here could get it. We will continue on Wednesday after the market closes. I will probably go over a couple things. It's hopefully what I really want to talk about is price targets. I didn't get to it today, but I'll get into it tomorrow or Wednesday. We'll get into it. I hope you all have a fantastic evening. If today is your rest day, make sure you spend the rest of the time getting off of your screens, please. Tomorrow is my day off where I sit and watch football and hang out and have a good day. And then I'll prep for the market because futures opens later in the day. So will I be live trading with you this week? Probably not. This week I'm going to try to get out and about. I'm not real money trading at the moment. It's kind of a rule of thumb. I will, hold on, let me end the recording real quick.